France 24's Oliver Farry reporting for us from Hong Kong there. Well, let's get you a change of pace. It's time for business. I'm joined here in the studio by France 24's Catherine Bennett. Hello to you, Catherine. We're kicking off with you telling us about a moment of reconciliation between the United States and the European Union.
Yes, so Washington and Brussels have agreed to suspend tit-for-tat tariffs. And to get a sense of how big a deal this is a transatlantic dispute that has lasted for 16 years. The US and the EU had accused each other of unfair subsidies to their respective plane makers, so Boeing on the US side and Airbus on the European side. Washington imposed duties on a record $7.5 billion of European goods. And in return, the EU added tariffs to $4 billion worth of American products, from Boeing planes to alcohol and chocolate. Now, both sides are hailing a fresh start in trade relations and have frozen those tariffs for an initial period of 4 months. EU Commission President Ursula von der Leyen said that the decision was excellent news for businesses on both sides of the Atlantic and a positive signal for their economic cooperation in the years to come. Staying in the US, where the latest jobs data shows a hiring boom in February. The US added 379,000 jobs last month. That's the most since October last year. And so many are taking it as a sign that the economy could be on the up. It's also a noticeable increase from the 166,000 jobs added in January. Of course, it remains just a fraction of the 10 million jobs that have been lost due to the pandemic, and it's still 3.5 million jobs short of the employment level this time last year. That also meant the unemployment rate fell to 6.2%. Nearly all of those job gains came from the hospitality sector, which saw a definite boost as vaccine rollouts have continued across the country and some states have relaxed restrictions. Analysts expect the increase in hospitality jobs to only continue as the weather gets warmer. Now let's take a look at market movements at the end of the week. In a surprising reversal after losses earlier in the week, US stocks are rising rapidly. The Dow Jones jumped more than 400 points since the open, seeing a gain of almost 1.5%, and the S&P 500 has risen just over 1%. The Nasdaq too has surged over 0.5% after earlier being in the red. Europe markets closed lower today after receiving a weak handover from Asian indices. The FTSE was down 0.33%, while the CAC 40 and the DAX dropped almost 1%. Ireland's economy expanded in 2020 despite the pandemic. The Irish economy grew by 3.4% in 2020, making it the only EU economy to post positive growth last year. Now that's due to its exports, particularly in the pharmaceutical and IT sector, which grew 6.25%. Multinationals like Google, Facebook and Apple also contributed. They accounted for half of the total value added to the economy in that year. Ireland's Finance Minister, Paschal Donohoe, called it remarkable, given the country imposed one of the strictest lockdowns in Europe last year. But just looking at GDP doesn't tell us the whole story. Domestic demand in the country slumped 5.4%, in line with other major global economies. Well, the growing violence in Myanmar is being watched around the world, and social media companies are finding themselves increasingly forced to take a stance on propaganda and potentially harmful content posted on their platforms. James Facina has the latest on measures taken by Silicon Valley giants in the face of the unrest.
Where to draw the line between free speech and the spread of disinformation? This is the challenge increasingly faced by social media firms. YouTube has closed 5 channels run by Myanmar's military. The video-sharing platform owned by Google said the army's videos didn't conform to its community guidelines. The decision from the Silicon Valley giant tops off the bloodiest week in Myanmar since the coup on the 1st of February. And it comes only several days after Facebook banned all of the country's military-linked accounts in one of the boldest moves yet. Earlier this year, the storming of the US Capitol was widely organised and relayed online, with experts saying it highlights once again the need for more regulation within tech companies. But control over the digital area isn't straightforward. For years, tech giants have shunned any responsibility, saying they only provided hosting services for users. But that stance is slowly weakening, and not only among US-based firms. Chinese-run TikTok is also on alert. It says it's begun taking down content after soldiers in Myanmar were found to be using the platform to deliver death threats to protesters through short videos.
Today, the Italian government launched a last-ditch attempt to save its beleaguered national airline, Alitalia, by appealing to the European Commission to approve a rescue plan. The carrier has got some much-needed attention with the Pope's visit to Iraq, as it was an Alitalia plane that jetted him, his entourage and the press to Baghdad earlier today. But it will take more than that to reverse the company's fortunes. Alitalia hasn't made a profit since 2002 and is bleeding money. Rome hopes to convince the EU that a rebrand and a restructuring won't fall afoul of EU rules on state aid. That wraps up the business from me.
All right, certainly a long time not to make a profit. Thanks very much for that roundup of the business news. Look, stay with us here on France 24. We'll have plenty more world headlines coming up for you. First,